Someone call 911. Stocks are very volatile this week amid trade tensions with the U.S. and China. The yuan has recovered. Stocks are recovering with it. But Jonathan, my question is, why did that pose a threat in the first place?
Listen, I think there's two things that are going on here. One is we have our continual conversation talking about U.S.-China relations and tariffs, and we've got the president who comes out and makes a statement, and then China has to rebuttal that. So I think that's the one issue that we have here that's been ongoing. The other one is anytime you talk about manipulation of a currency, that is not a positive headline. That's not going to help our markets rebound. And I think investors, when they see that, whether they believe it or not, are forced to move away from this market and to see how things are going to pan out.
Still, China did officially pull out of buying U.S. agriculture. What kind of effects will that have on companies like John Deere and overall GDP?
I think overall, when you have a purchaser like China, who considers to be a large client of the United States, once they pull out and try to source from other areas, that clearly is going to have a negative impact across the board, whether you're talking about individual companies, whether you're talking about sectors, or when you talk about our economic data. I think this is all sort of the posturing that we've seen over time between the U.S. and China, who's flexing their muscles more, who's going to be the first one to blink, and how do we get everybody back to the table. So this is just all part of the chess match.
What about oil, right? Oil prices could rise between, trade tensions, etc. But then again, China could just break sanctions, start buying from Iran, and then prices will go lower. Isn't that something Trump wants in the first place?
Once again, it's a question of just posturing, right? And China, they probably don't have as many, bullets as the U.S. does, so they're kind of hanging on to what they do have. And obviously, we just, as discussed, saw it in the agriculture. They might turn that into the oil area, too, and start to say that they're going to source their oil from other resources where they don't get it from now. That's clearly going to add a lot of volatility to oil. We've seen oil come back down off the highs a week ago or so, and we continue to see that volatility there. It's just all part of, once again, playing this chess match of who's got bigger muscles, who's going to blink first, and how do we figure out some way to get everybody back to the table and get to some sort of resolution.
Sure. Now let's go back to equities. Let's look at the S&P. It gapped lower yesterday. What levels are you watching?
Yeah, once we hit that 3,000 mark, and I wasn't the one to call that was a top, but clearly when you get to those levels, those are psychological levels. It got above there, tried to stay there, came back down, bounced around there a couple of times there, but clearly we've fallen off there. As we get down to these levels here, we've clearly have broken many levels on the way back down here. Kind of hard to see where this is all going to equal itself out. Trading right now around 27.48. So we'd say, 28.48. So 28.30 might be the next level on the downside there that we're going to try to see some support.
All right, 28.30 will hopefully be support. That'll be the lifeline. Jonathan, thank you so much.
Always a pleasure. Thank you.